Servus, kia ora, haere mai, welcome everybody to the channel. In this video, I want to look at a very recent meeting which was held at the EU Parliament buildings. And in this meeting were representatives of industry from across Europe presenting on the topic of the CSRD, sustainability reporting, and they were presenting to a couple of members of the EU Parliament, particularly from the Renew group. I'll talk a little bit about what Renew is in a second and what their sort of stated political agenda is. The full content of the session was recorded and is available on the Greenly YouTube channel. I will provide a link to the full original video in the description to this video below. So first of all, a brief comment about Renew. Renew is described as a sort of centrist political affiliation within the EU Parliament. There is a map on their website. You can click on the various member states to see which political parties are part of the Renew group, and you can get a feel for where they sort of sit politically. They are not a left wing affiliation that is very much in favor of, let's say, legislating sustainability reporting and action. They are more centrist, and they explicitly stated in the session that they are in favor of simplification, not necessarily or not maintaining the status quo. They do want to see the sustainability reporting regime simplified. This is in line with the Draghi report. They are also not a hard right affiliation group. They do not want to see the sustainability reporting efforts and regime abandoned or completely deregulated and removed. So that is the agenda, the political agenda that they have established and they seem to be coming from. And it is worth bearing that in mind throughout this video, that the session that I am talking about was presented to Renew. So those who are lobbying for change, those who are lobbying for the status quo, need to bear in mind the political agenda of the parliamentary group to whom they were presenting. Simplification is a focus of their political agenda, so that needs to be borne in mind. So enough of my preamble ramble. I want to now look at the specific content of the session. And what I want to do is I want to go through very short snippets of the people who presented, identifying where I think they have made explicit points, policy points, where simplification can be achieved. Before I do that, though, I want to present my own sort of proposal for simplification. And then I will use that as the basis for kind of critiquing or commenting on the simplification measures that were presented in the session. What I want to avoid doing is just talking about the general comments that were made. So a number of the comments that were made were stating that the CSRD provided certain benefits. I'm going to avoid kind of just reviewing those points because it's hard to draw direct policy measures or policy implications from those general statements. I want to focus on the specific statements so that we can draw up some kind of picture of concrete policy measures that could be made. Before I show my sort of suggested list of simplification measures, what I want to do is just provide a little bit of background about the sort of legal / legislative setup that we're dealing with. So what we are currently mainly talking about is the CSRD, which is the regulation which specifies which companies must report sustainability information, right? So this is largely concerned with who has to report and when. And then there is a sub-document or a subset of documents, which is the reporting standard itself. And that sets out the precise information that should be reported. It sets out the rules for how it should be reported. And it sets out the quality controls and the process and materiality and all that sort of stuff. That is the standard. So that's the ESRS. And then there's a couple of other pieces of legislation we'll talk about, namely the CSDDD, which is a supply chain sort of risk identification piece of legislation which is attached, and taxonomy, but I won't really discuss taxonomy in the video today. So from a legislative perspective, from Parliament's perspective, this is the act of Parliament, or the regulation, or the directive. This is the bit that they can directly change with the stroke of the regulatory pen. This here on the right, the standard, this can be changed as well, but that is a separate document that exists outside of the legislation. So that have to be that would have to be redrafted, or a new standard written, or a new set of standards written, and those activities can be done independently of each other. You can just change the requirements for who has to report when here, or you can change the content of the reporting in here. Currently, those two things are separate. So it's worth bearing in mind when we're talking about simplification measures, under which set of documents are we proposing those measures? Are we proposing them here in the directive itself? Or are we proposing them, it's a bit of a tongue twister, here in the standard? So I'm going to try and make this clear, and I'm going to try and clarify when we're talking about the suggestions from the attendees of the session, whether I think they are talking about changes to the CSRD or changes to the reporting standard. So that's just a little bit of background. It's important to clarify that because the parliamentarians are probably largely focused on the CSRD, which is the directive that they can kind of amend. They may be less focused on this. However, we can't be certain that they have a full understanding of the distinction between the two. It certainly seems that some members of the European Parliament conflate the two, and they conflate the reporting content, that is the data points that must be reported, with the CSRD itself. So I will try to be clear about the distinction between these two things and the overlaps as I go. Righty, onto my list. So this is a document I've prepared. It is a PDF. I will provide the PDF in the description of this video. If anybody wants to download this and also sort of have pre-prepared simplification measures they want to send to their EU parliamentarians, this is the kind of the list I'm currently sort of using and would be what I would send to my MEP as my suggestion for simplification. I'm hoping that this gets into the hands of someone at Renew. I don't have direct access to Renew myself, so I kind of struggle to get this information into their hands. This would be my sort of lobbying. Okay. First of all, I've got 4 main points that I think should be implemented. First of all is more effort politically and across the market, and this doesn't require any legal change, explaining what double materiality is, or explaining what materiality is. There's been a lot of political noise about this 1,000 plus data points. These data points are in the standard, okay? These are not in the CSRD. They are actually in the ESRS, the 1,000 plus data points, and a lot of people have complained that this is too many data points. Now, that ignores materiality, because not a single company so far, in all of the sustainability statements that have been published so far, not a single company has had to report all 1,000 data points. That is simply the absolute maximum that could be reported if every single part of the standard was material. But the process of materiality is the process of reducing the scope of the standard. So I would say that there needs to be more pushback from the political parties explaining the way to reduce the data points is already in the standard. I really struggle to make this point heard and clear. This 1,000 plus data points has become a political football which has no basis in practice or reality. So this is a measure that I think can be done simply with making voices heard. Then we have some moves here within the standard to streamline and simplify the existing standard. So this is something that would have to be delegated to EFRAG, the company or the organization which drafted the standard. The first is to go back through the ESRS and remove redundancies and improve the readability. The standard is not very simply written. It is difficult to read, it's difficult to navigate, and there are redundancies and simplifications that can be made inside the standard itself. I think that should be done. Then, very simple thing, collapsing the disclosure requirements and the application requirements into the same places in the standard. Currently, you go through and you look at what disclosures you have to report, and then you have to navigate to another part of the chapter to work out what the application requirements are for those disclosures. These two things should be side by side. This is just a matter of making it far simpler and easier to read, and then collapse those down. Some of the application requirements aren't necessary. Get rid of the ones that aren't necessary and bring the ARs and the DRs together in the same place. Then formalize the drafted LSME standard. The LSME standard, except for I think 2 people who commented on this, Marcus Adler and one other, the LSME standard has been completely ignored in this whole process. The LSME standard effectively does the 30% reduction that was proposed by the Draghi report. If there is to be a reduced burden for LSME size companies, then just use the LSME standard, which is already being drafted. And the LSME standard includes double materiality process, whereas the VSME standard does not explicitly. So this is actually a far better standard for SME size companies, because not only is it a reduced scope from the full ESRS, but it includes materiality, which is a further scoping exercise. So there we go. That is my proposal for streamlining the standards. The next is going back up to the directive, and that is to be improving the assurance requirements. We heard, and you will hear, a number of people in that session talking about the burden of assurance. I know companies who have been quoted costs far in excess of the actual costs to prepare the sustainability statement for their auditing. So that is, an auditor has charged them more money, or has quoted them more money to audit the sustainability statement than the entire process of drafting it in the first place. This is completely disproportionate. So I think limited assurance reporting needs to clearly reduce auditor costs and overstepping. It needs to be more well defined. Simply defining limited assurance under existing financial reporting rules I don't think makes sense. There should be a specific definition of what limited assurance is for sustainability reporting. Secondly, I think that the limited assurance should be explicit that it is the report itself which is subject to the assurance, and not all of the processes leading up to the reporting. Companies should not have to go through lengthy processes to explain how their materiality process occurred. The auditor should simply audit that the description in the sustainability statement of the materiality process is accurate or is not subject to error. They should not then go through and trawl through every part of the materiality process in their auditing. The next one here is we should open up the assurance to certification bodies like TÜV and DEKRA. These are the organizations who are already familiar with sustainability certification. They do it for carbon footprinting, they do it for PCFs, they do it for other sustainability frameworks like the GRI. They have lots of experience when it comes to auditing or certifying sustainability information. They have been cut out of the assurance bodies in the CSRD. The CSRD should open up assurance to bodies that do sustainability certification. This will reduce costs because they already know how to do this kind of work. Then my last suggestion is to integrate supply chain due diligence mechanisms into the CSRD. There are duplications here. Simply put, a supply chain, collapse those two things together so companies don't do duplicate work. The transparency part of the Triple D should be the material negative impacts in the value chain under the ESRS. This ignores then the changing of the thresholds. There are others who have got better ideas about what the thresholds should be, so I'm not too fussed about the thresholds. I do think there should be a sort of medium-sized LSME type group. This is the phase 2 and phase 3 companies, and I think the phase 2 and phase 3 companies should be doing the LSME standard. Okay, there are my points. As I said, if anyone wants a copy of this PDF, I'm happy to provide it. I've also got a second page here, which is why I think the omnibus proposal fails to meet the recommendations of the Draghi report, but that's more criticism. That's not constructive. What is constructive is the first page of policy suggestions. Let's look now at the session itself. I want to start with the opening statement from Pascal Canfin. He is a Renew member, the political group Renew. Pascal is also an MEP. He is a member of the parliament. There are a couple of his opening statements which I want to play and just comment on very briefly before we go through the representing speakers. So let's just have a listen to what Pascal says here in his opening statement.
I'm more than happy to listen to you, to have your feedback of what worked, what didn't work, what has to be improved in the new rules on CSRD. But my political line and the political line of our political group, Renew, is very clear. I mean, we are 100% behind simplification as long as it is simplification to deliver, to reach our objectives.
Okay, so this is the really key thing to take away from what Renew wants to do here. First of all, simplification is absolutely on their agenda. They will not support a proposal which maintains the status quo in terms of the CSRD. Now, whether that means the standard and the CSRD, or just the CSRD, or just the standard, is not clear in that statement. But simplification is definitely what Renew want to achieve without abandoning the objectives of the Green Deal and the CSRD. So the objectives remain, but they are 100% in favour of simplification. The reason that is so important to note is that what they are looking for are policy measures that will help them achieve that simplification. So it's always worth bearing in mind the political agenda of the people to whom you are talking to, because you have to try and make your points appealing to line them up with their agenda. Their agenda will not change. You have to adjust your points to match their agenda to show how what you want achieves their political goals. Okay, that's really important. Let's skip forward now to some of the presenting speakers.
And so the question for the companies is, first, do they want to really control the data which is speaking about them on the market? And so it's a question of competitiveness and sovereignty. Because if they don't control their narrative, then the data will be created by others, by third party.
So there's the argument there. Simply put, if companies themselves don't collect and report this data, then someone else will proxy it on their behalf, and those companies will lose the control over the data that is being used to measure their fitness for investment.
Also, the ECB, they need this kind of data within their credit portfolios, and now they're completely blind again after the omnibus proposal. And I think we should really take care of the backbone of our economy, give them a simplification. So, for example, the VSME standard, or there's the LSME standard, something like that, where you could help them to make it very easy. We can automate up to 90% of the data points which we have in the VSME with our software. So it isn't a problem. We can automate it with software, but we can really use the benefits and the strategic approach we have with the CSRD. And I think personally, this is something which will give us long-term competitiveness.
I don't think a further summary of what Marcus is saying needs to be said there, but there you go. That's his opinion of how scoping down the reporting standards, especially leveraging LSME and VSME, with support of software that can do a lot of automation, will help solve this problem. One thing I mentioned in my other video is it seems like the Commission isn't aware that the market has already solved a lot of the CSRD reporting burden problems. We've had 1.5 years now to develop complex tools, really good user interfaces, simplification of the processes, common understandings of how to do materiality, how to report, reporting content, leaning on other frameworks, leaning on internal expertise. A lot of the problems of the CSRD reporting, the standard at least, have already been solved by the market. And I feel somewhat like the Commission is 1.5 years to 2 years behind the market, which is not unsurprising. They are politicians after all.
I just wanted to share a couple facts. Well, first of all, people talk about the cost of this. So on average, it's about 10,000 euros, okay, for a medium-sized company. With VSME, it's more like 5,000. So it's not an expense that is crazy for most companies. It can be, of course, more expensive for larger ones. But and in terms of time to completion, it can take, up to, let's say, 15 days of work for a project manager, 20 days plus half a day to 3 days for individual contributors. So it's not hiring 10 people, okay? It's basically a tenth of a person's work in the year. What often costs a little more is the audit on top. So that can be a little more time consuming.
So it's not quite clear what these costs represent, and everything seems to be a little bit conflated here. I suspect that these sort of a few days type costs are referring to a very small company doing an LSME standard. A VSME standard. So in that sense, I think this could be representative of the work. I would be shy to go quite as low as Alexis is going with his sort of estimates here, but I would not base a typical SME effort on these numbers. These seem trimmed down if this is supposed to represent the entire CSRD process for an SME, especially including things like Scope 3 and policy drafting and reporting. So it's just a little bit unclear exactly what the scope is here that Alexis is describing. However, he moves on to the next point about audit costs. Now, this is absolutely something that is worth discussing, and this is something I would like to stress. Audit costs for CSRD compliance are out of control. The auditing detail is out of control. I've had auditors doing all sorts of crazy things, such as wanting clients to prove a negative. Prove why you did not find an impact, a risk, or an opportunity for topic X. They're going far beyond what I would consider limited assurance. They're supposed to be doing limited assurance of the sustainability statement, and I have some going into really high levels of details with all of the processes behind a company's environmental management and their double materiality process. Far too deep and far too expensive. And you will see this coming up a couple of times from different presenters here.
That would fall under CSRD, that did the work to prepare, but that now would fall out under the current omnibus. And I think it just harms them. It's really hard to keep on reporting if it's not mandatory, because you always have a long list of priorities and you have to prioritize them. And if it's not a regulation, it's just not going to be there. But in the end, if you ignore sustainability, you ignore risk. Climate change does not just harm the nature. It's about supply chains. It's about raw material scarcity, and it's about heightening operational costs. And if we're excluding companies that fall under the the lower end of the threshold, the 250 plus employees, that really harms, especially, as you said, our kind of small, medium backbone of our economy.
Still, CSRD is not perfect. I have something to say. The main problem is the audit for me. There are too many qualitative data points, and they are hard to check. The line-by-line compliance approach is too heavy for a mid-sized company like mine. The cost of the audit of CSRD is too heavy.
Okay, now this is something that I agree with. The audit approach is too expensive. And here's mention of this line-by-line compliance approach, particularly in the context of the qualitative disclosure requirements. Now here I blame IG3, and IG3 is where EFRAG decided to break down the qualitative disclosures into lots of sub-data points. I think this was a big mistake. I think the qualitative disclosures should be collapsed into single narratives. They should not be these sub-pointed breakdowns, and IG3 should certainly not turn qualitative disclosures into multiple data points, because this is where the auditors have been going line by line and breaking down what should be a paragraph or a half-page text into a series of individual points which they are checking for. This is the wrong approach. it's because of IG3, and it's because of a lack of awareness in the market about what qualitative sustainability reporting is normally like.
One of the key areas, and I'm sure many of you have also faced this, is the fact that the interpretation of how to do things are done differently in different countries. Now, this we can definitely deal with.
So just a very short snippet there. There seems to be some suggestion that the way this is being interpreted, the ESRS or the CSRD between nations, has been inconsistent. I certainly agree that it hasn't been implemented consistently. Some countries never even passed the transposition laws. Germany, cough, cough. But it'd be interesting to know exactly where these variances lie in approach. And if the variances are in auditing, my bugbear at the moment, then that certainly argues that there needs to be a European-wide statement about what the audit process is supposed to do for ESRS/CSRD. It would certainly be interesting to know which specific interpretive approaches here are causing the problem, and to see a concrete proposal for how they would be harmonized or standardized.
We are committed to sustainability, and from our experience, we can say that we are easily able and willing to provide a manageable, clearly defined number of key figures to ensure comparability of sustainability activities of different companies.
So here I think the direction of the suggested policy changes, or the direction of the suggested activities the Commission should be looking at, is the standard itself. So we're not talking here about the thresholds in the CSRD for who should report, but talking about cleaning up what's in the standards themselves so that companies will still be required to have a mandatory reporting obligation, the smaller SME types, the phase 2 and 3 companies, but the content of what they should report shouldn't match what the larger companies are reporting against a full kind of standard. So once again, we're leaning towards an LSME standard or VSME standard being mandated in some way. Next to present is Alexia Delahousse. I'm not going to play any of the actual content because Alexia was making 3 kind of main points over about a 1.5 minute spell. And if I play the whole section now, then it will be a bit long in this video. I do recommend you go to the original recording and listen to Alexia's full content. I'm going to summarize what I think she was communicating, so apologies for not playing any of her content directly. The first point was about cost and the fact that in the first initial years, many companies have been completely lost about what the costs would be, and they would like EFRAG, or they would like there to be some more information published about what the typical costs are and further guidance on process. So a couple of the specifics that were mentioned were things like how many stakeholders should be engaged, how many IROs should be considered. Now, in my opinion, we have that information now. We don't need EFRAG to communicate that. But at the start, that was missing, and companies were getting quoted some crazy prices for some of this work. And I think now we should be able to have some level of transparency. I would like to see some well-funded studies into how much companies were spending on various activities, really good quantitative information, how many stakeholders are being engaged, how many IROs are being assessed, how many how many DRs are being reported, how much is it costing, what are they paying for services, what are they paying for tools, and what are their business sizes. Some really comprehensive research on all of this so we can use that as benchmarking, and auditors can use that as benchmarking. Another suggestion was tax incentives for companies who are reporting, smaller companies. I'm not sure if the EU can do that. I think that belongs to the member states, but it's simply something worth considering. The next one was a comment about audit, and there was a suggestion from Alexia, which I don't agree with, but it's still interesting to hear it, that there should be maybe more audit focus during double materiality early on. I think double materiality should not be subject to audit. I think it's only for smaller companies. I think they should simply be judged on whether there are misstatements in the sustainability statement, and the process should not be subject to audit. It should simply be, is the information presented in the sustainability statement true or not? For larger companies, I think it makes sense to go into more detail about the process, but I think for SMEs, to keep audit costs low, stick to limited assurance of the content of the sustainability statement and not the processes that led up to it. Lastly, that's probably controversial. Lastly, another point that Alexia raised is having more discretion for smaller companies to not report metrics if they believe that reporting the metric would expose them to a lack of competitiveness due to the transparency. So this is the argument that some transparency could jeopardize your financial competitiveness. I think there is a good argument in there. I would just suggest we adopt a comply or explain approach. This is common in the United Kingdom. Comply or explain, it's kind of a principle of how their sort of reporting works. If the EU could do the same for certain metrics, comply or explain, then I think that makes perfect sense.
More than 90% of our impact are in the value chain, in the upstream part of our value chain. We already finished our double materiality analysis, and we implemented a light form of risk management in our value chain management. And we have now 4 entities in our value chain that have more than 1,000 employees. So our data is based on those 4 entities within turnover on the purchasing side of 7%. So to become more sustainable, we need the data of our value chain, the 90%.
So there's the interesting point. Basically, at the moment, the situation is they've only got 4 entities which are producing reasonable data. Those are those 4 entities over 1,000 employees. And that only represents 7% of Wildeboer's procurement. So the other 90% of the procurement is already missing. They are largely dependent on SME suppliers. And so you've got this whole ecology, this whole ecosystem of SME companies who all need each other's data, but the Commission is proposing just to remove them all from the reporting burden. This is a huge proportion of the economy here, where information sharing is necessary or is important, and the Commission is basically just removing all of that. And companies like Wildeboer have been preparing for this information to be available. So this is a really interesting point. The SME market, the SME economy is being negatively affected by the Commission's proposals.
Come from very, very large companies for the past 10 years. We've been reporting. And I mean, the war didn't end. I was just telling people all the data points you're talking about is exactly the KPIs we're already talking about prior. The only thing with the CSRD is that they did like a cross-check between the new directive and the ISO 26,000. If you are familiar to that, you'll find all the indicators. You're just there. And maybe scaring people with telling them 100 and 1,200 data points. So people were getting very, very, very scared.
So there's Dolly also making a point that I've made, is that this messaging that was coming out from the Commission and from the Draghi report and from van der Leyen, this whole idea of this 1,000 data points, and, you know, I've mentioned who I think is partly responsible for this messaging. This was nonsense, because no one is reporting or has to report all data points. And this figure of 1,000 has been going around and around in circles, and everyone's been getting terrified by it. And Dolly makes the point that a lot of the critical KPIs have been with us for a long time. There's nothing new here.
One ESRS referential in the end, and have a system of Russian dolls or perhaps Ukrainian dolls that are like opening with the size of the company. The ESRS referential is able to do that. We don't need to invest another one or a third one or a fourth one, because when a company is growing, changing system will be a nightmare. So that's really something that I don't understand. The 1,200 data points basis is good enough to be the basis for large companies. Then you have the smaller one for the not voluntary, compulsory, but small. And then for the voluntary, you have like 100 basis points. That's not complicated. And at the end also, this audit should be simplified. We agree that the double materiality assessment should be the first step of the audit, and that the cost of the audit should be capped. It should be in the law that it cannot be like 300,000 euros.
Okay, so apart from auditing the double materiality process, which I'm sort of still not entirely convinced by, audit costs, the effort of audit, absolutely agree. This needs to come down. It's been blown way out of proportion. Another thing that has become disproportionate. But I just want to go back to the point about these 1,200 data points. Really good system proposed here. 1,200 data points is the maximum number for large companies. Just do a tagging system and then just identify something like the 100 data points that are required for the very smallest reporting entities. Just use a tagging system in the standard. It's such a good idea. I don't know why nobody thought of this. Single standard, you just have a filter based on company size for which are the mandatory data points, or which are the included data points. You can still have double materiality to further filter them. Doesn't really matter to me, the mechanics, but it seems like a really, really suitable suggestion. Unfortunately, during the consultation session, the camera was not pointed directly at Elena. She will be on the right-hand side of the screen, half cut off.
And what we've seen in the past years is that the previous reporting obligations under NFRD in Europe have consistently improved the situation in terms of corporate disclosure. However, as investors, we currently still have numerous data gaps, and that is specifically the case for small and mid-sized companies, of course, even more so for unlisted companies. And so it means that investors currently still bear some significant costs in trying to access that information. Sometimes we do not access it at all. And that situation is not helpful for investors. It is not helpful for their end clients because it increases the cost of accessing to sustainable investment products. And it's also probably not a very good situation for companies, given that they end up having to produce answers to numerous ESG questionnaires for all their investors and their financiers. It also means that companies and investors are stuck in a dialogue where they are debating estimates rather than actual KPIs that are disclosed by the companies.
So this point is really, really important, and it seems to have been completely lost in a lot of the conversations about ESRS and CSRD. If you are a small, medium enterprise and you are reliant on investment, if you do not report sustainability KPIs, if you do not measure these things yourself, and we're not just talking about metrics here, we're talking about narratives as well. If you do not describe the policies you have in place, if you do not describe your approach to managing sustainability impact and sustainability related risk, then the people who are controlling the flow of investment will guess that information on your behalf. It raises the cost of investment, it delays the time to investment, and it decreases the accuracy of the investor's decision making. You are incentivized to produce this information if you are in part or substantially dependent on investment. This is really important point to make. The whole enterprise becomes more expensive and less accurate if this information is not being made available. And this also applies to unlisted companies. That is the black box for investors. Smaller enterprises who are not listed are penalized because they are intransparent. So I was actually really impressed with Elena's presentation, and I want to play a second snippet, and this is at the end of her presentation when she summarizes 3 main points that she thinks should be sort of maintained. And here we're talking about a mix of things that are in the standard and in the CSRD itself. So in the standard, there's the preservation of double materiality. This is important because if we move to the voluntary reporting standard, if that becomes the norm, then the voluntary reporting standard does not have materiality. There is no materiality built into that voluntary standard. So that is a problem, in my opinion. That is why I prefer the LSME, because the LSME explicitly adopts materiality. The second point that Elena makes here is the continued support for an audit in some kind. Now, there is a mention of sort of reducing the audit burden for SMEs, which I'm fully in favour of. The exact proposal for how audit would look is not clear here, but there is preservation of some audit role. And the third one is not been mentioned by anybody else, and this is also in the CSRD as auditors as opposed to the standard, and that is extraterritoriality. That is the fact that European businesses who have large non-European operations or non-European holdings who have significant European operations should be reporting the KPIs that are relevant to the non-European operations. This is obviously very critical where a lot of impact, a lot of risk exists outside of the European geography. And if companies are allowed to ignore that, then once again, we're in the situation of intransparency. We have no idea what's really going on. So I will play these 3 points. I've just summarized them, but it's good to hear them from Helena in the first person.
And to do that, I think it's critical to maintain the 3 core principles of CSRD. The first one has been largely mentioned. It's double materiality. It's very critical to the way Europe does sustainability. The second important point has been also mentioned. It's audits. And while we feel that probably there's a pathway that must be created for smaller companies to build up their auditing processes in terms of sustainability, we still feel that having audits is an important dimension because it adds to the reliability of the data that as investors we use. And the last point, which has not been mentioned today, but which is very important from a financial standpoint, is the extraterritoriality dimension in CSRD, because that creates a level playing field for companies, European companies, but it's also a very important point for investors that have very large, very broad international portfolios to run.
So let's leave it there for this presentation. We're moving on just to the last couple now, and then I'll provide sort of a couple of summary words at the end.
So, yeah, as you can hear, I don't think we can promise you a lot, but we can work hard together, and you can, with all your voices all over, speak up. Because right now it is overwhelmingly only the ones that actually want to water down everything. They are the ones with the largest voices, unfortunately, in the parliament. This is not Pascal and me from Renew, and not the Greens and S&Ds either. Not all the EPPs, but quite a lot of them. So please.
This is really, really worth noting. This is an MEP from Renew stating that the voices currently which are the loudest are the voices who want wholesale deregulation and effectively abolition of the CSRD. There is a call here for people to express their opinions. This is wanted. So that's partly what motivated me to make this video, to try and express my opinion in favor of some simplification, but not a wholesale deregulation of the CSRD, and to propose what I think are some very specific and concrete measures that I think can be made into text, can amend the CSRD, or can edit the current standard, or the standards. If you are in the ESG kind of the sustainability sectors, please do similar. Please express your opinions to your MEPs. If you have an EEP or an EPP, if you have one of these MEPs representing your area, and Germany, this is you. A lot of us in Germany have this. Bavaria, where I am, we have largely conservative MEPs representing Bavaria. If they are part of the EPP, talk to them, lobby them, because these are the swing voters in the parliament who are likely to vote for a simplification measure over this wholesale omnibus deregulation. We have to be strategic here. Find the MEPs who are in the centre right, target them with your lobbying, target them with your communications, and force them to see that there is a business imperative, there is an economic imperative for us to maintain these reporting standards in some form. And that is the argument that needs to be made with them. And if they don't vote the way you want, then elect them out of the EU Parliament at the next elections. We have, I think, one more short presentation at the end to look at. I've decided to stop my video here. There were a couple of other speakers after that point and making good points, but in the interests of my time, I'm unable to kind of review any more of them. I think there were 3 more still very interesting comments, including someone who's in the audit function. So it is actually good to hear from an auditor about their opinion of the CSRD and the ESRS in this process. Because as you can tell, I've been sort of in favour of reducing some of those audit burdens, and perhaps an auditor might have a different opinion, or they might concur. So it's worth listening to the entire session over on the Greenly YouTube channel. I would stress though that when I watched this video and moving backwards and forwards between the sections to capture footage for my video, there were a large number of adverts. So just be warned that you may have to deal with a significant number of adverts, but maybe that's just YouTube doing that without Greenly having a say in the matter. So to summarize, the main point I guess to make from my side is that if you are in any way in favor of maintaining the European reporting regime, then you need to be lobbying your MEP in favor of it. And of course, if you want to access the PDF I made and just send that to them or use that as a base text for suggesting your own changes to the CSRD or the standard, then please do so. I'll make that available for download for anyone who wants to use it. And the last thing is, I guess, just to be noisy. Be noisy on LinkedIn, make your own videos. I think that we are at a pretty sort of pivotal time in this process. I really hope we can end up with a situation where simplification of the standard is what occurs, rather than this wholesale destruction of the reporting obligation. But, you know, it's the future and it's uncertain. So thanks for watching this video. I hope there's some good food for thought and some good practical ideas for where we can go. Good luck, everybody. We'll see you again.